Hello and welcome to Closing Trades right here on ET Now. Just quiet consolidation. That's how we're currently at. Absolutely flat, in fact, right now in trade. 25,190 thereabouts on the Nifty futures as we speak right now. It's, the days are only getting narrower and narrower. At least for the last two trading sessions, barring, of course, that fillip that we had on Friday post-policy. But that said, cement, technology, metals, they are the ones which are actually holding out today. New age, realty, banks, financials, they are the ones which are seeing some profit taking after a good run-up that you had at your hand since Friday. So look at a Bajaj Finance, that's down about 1%. ICICI Bank, HDFC Bank, Eternal, SBI, Bharti, L&T, Reliance. The large caps or the blue chips are the ones which are a lot more sedate today. On the flip side, pretty surprising a move on a DRL, for instance. That's holding up about 3% right now. Technology definitely is making a comeback. So TechM, Infosys, HCL Technologies, Wipro, they're the ones which are actually playing catch up. Or for that matter, Grasim, after a brokerage note, that's holding up about almost 4% in trade. Or an ITC, which is also holding out along with Nestle. So I mean, if you want to call it that, it's a very defensive tilt that the market has today. Snehi, what about the newsmakers, though?
Well, lots of newsmakers today, because while the Nifty seems rather flat, it's the broader end of the market that's still holding on to a tinge of green today. Some big newsmakers coming in. Let's talk about the first one. That's Jindal Saw. At one point in time, the stock was higher by almost 9% in today's trading session. This is on the back of the capex plans that the company has announced, wherein they're going to be investing a lot in the Middle East region. 3 lakh TPA seamless pipe plant in Abu Dhabi with an investment of $105 million is coming up. There's a 10 million JV that they've signed with the company, 3 million JV with another company, and the project timeline is 12 to 36 months. So lots of capex and expansion that's happening by Jindal. So that stock is holding up pretty firmly in today's trading session. Other than that, you have Grasim. This stock is the top Nifty gainer, or at least was for the course of the day. And this is on the back of a Morgan Stanley note coming in, wherein they've maintained a positive stance on the stock and hiked the target price to 3,500 rupees per share compared to 2,975 earlier, where they've also upgraded the stock to an overweight rating from equal weight earlier. So very positive stance coming in from Morgan Stanley on Grasim. That stock is also holding up very smartly in today's trade. What's not doing all that well and is slightly under pressure, the top Nifty loser at one point of the day was Eternal. Let's see what that stock is up to right now. Trent is the top Nifty loser right now. Eternal seems to have recovered a little bit, but nonetheless, Eternal was in news on the back of Rapido's foray into the food delivery space, wherein they're tying up with restaurants on a much lesser commission that both of these players, Zomato and Swiggy, are offering. But remember, Rapido does have a much bigger fleet compared to Zomato and Swiggy. So that is something at least that Elara's note was pointing out in the morning, wherein they're highlighting how Rapido's foray into an already competitive market could incrementally be negative for both of these existing players, the likes of Zomato as well as Swiggy. And lastly, Avenue Supermarts. So two stocks, in fact, that we're watching out on the back of block deals today. One of them is Avenue Supermarts. That stock is lower by about 3% right now. 10 lakh shares have changed hands is what we understand in a block deal. And we also had a block deal right at the opening bell today, wherein 94 lakh shares of AU Small Finance Bank were changed in block trade. So that's another stock that we're watching out for. But these are some of the top newsmakers as we have about an hour of trade left.
Yeah, but Kunal, what about this extremely lackluster move on the Nifty? Is it only bracing for the next move up?
Yeah, it should be on the upside, yet again, because, many of the global markets are making new highs. I think FTSE, today has made a lifetime high levels. We were discussing in the morning that how global indices like DAX, Hang Seng, etc., these indices have recovered. Dow Jones is on the verge of a major and a massive breakout on the upside. So maybe a push of another 500 points on the upside could lead to a trigger that many of the global markets would start to realign themselves. And as it has post the last couple of days of news flow, the RBI policy impact on the indices, we are still trading about the 25,000 mark on the index. The only reason why I believe that the markets are behaving in such a kind of a very tepid range is because of the drop in the India VIX from 19 to 14 to 14.5 odd range of India VIX. So I believe that we are now into that zone where you'll have to be a lot more of a positional trader rather than being an intraday trader at this point of time, because the market moves could be a lot more gradual rather than being more momentum driven.
Okay, so that's the take on the markets. But Kunal, what about these specific buzzers today from the Nifty 50 pack? For example, something like a Grasim's, Dr. Reddy, Tech Mahindra, all of these stocks are doing well. Grasim, of course, we have news flow. But what about something like a Dr. Reddy's or a Tech Mahindra, wherein we're seeing the resurgence of pharma and IT once again?
So yeah, I think that's the tilt of the markets. We were discussing that how IT stocks in the IT sector could be poised for a breakout or a turnaround as such. For the first time, I think the last 5 months or so from Jan, first half is where you're seeing the IT index making a fresh swing high, and it's managed to break past above our previous major resistance points. That I believe could be a interesting trigger that we are looking at a point where the IT index could get into a turnaround. Dr. Reddy, something which I covered in yesterday's chart busters also. My expectation was that the stock has been showing a lot of better strength as well as strong price volume comparison. So it doesn't come as a surprise that Dr. Reddy at current levels is perched closer to its previous major highs, crossed at 1300 levels quite comfortably. So yes, the tilt which is coming back in the markets yet again is that pharma, select pharma stocks as well as the IT pack. I think these are the kind of sectors which one has to focus on.
Right. Okay, let me welcome on board Shivani Sarkar Korean as well and find out what she's making of the market right now. Shivani, it almost seems like we're dried up of cues. The RBI also fired a big bazooka. What next? Do you think it's now really towards US and China, and what comes out of that 90-day haul on tariffs?
Yeah, hi and good afternoon. So you're right. We've had an exciting week with a lot of policy action. But what has been a standout for us in the market has been that domestically, if you look at most of the macro parameters, especially in context of what's happening globally with the trade and tariff war as well as geopolitical tension, domestic macro seems to be holding up fairly reasonably well. And of course, the policy push from a monetary side, which we've seen over the last week, or rather this entire calendar year to date, and liquidity improving overall. The other factor I think the market will clearly focus on is the earnings trajectory. So when you look at Q4 FY25 earnings, despite the fact that expectations were muted, I think the earnings delivery was actually better than expectations, especially where the large caps and a select few mid caps were concerned. And therefore, that sets the trend in terms of how earnings possibly pans out for FY26. Now, on a mid-single-digit earnings delivery for 25, now consensus expectations for 26 is of double-digit earnings growth. And if the domestic macro continues to hold up, and also the support in terms of growth that you've seen from a policy perspective, hopefully earnings should start to improve, albeit at a moderate pace. And that possibly should be the factor that the market clearly looks out for. From a valuation standpoint, of course, our markets are not cheap. And given the current run-up that we've seen, our belief is that from a risk-reward perspective, large caps still continue to be better placed than mid and small caps. But mid and small caps, there are opportunities, and therefore one has to be more bottom-up in that segment. But one has to overall, if you look at the market, mid and small caps continue to trade at a premium to their long-term average multiples.
Shabani, hi, this is Snehi also joining in. We spoke about a couple of triggers that have led to some sharp market moves, be it the budget, and followed by that you have the policy, you have earnings. What's the next big trigger that could shape up the next trend for the market? Could it be monsoons? Because we're predicted to have a healthy monsoon this time around. So do you see any turnaround coming in the overall consumption space?
Yeah, so consumption is a space where, we believe that there are quite a few triggers. One, as you rightly mentioned, the budget set the tone with the tax benefits that were given to the middle income and the mass segments. Therefore, that should help in terms of boosting consumption. The second is, of course, interest rates have come down with the RBI cutting policy rates by 100 basis points calendar year to date, and the CRR cuts which are to follow. So from that perspective, the interest rate burden on the consumer should also start to come down. And the third factor, of course, for consumption is the monsoons. Hopefully, as per what has been the initial estimates, monsoons this time around are also normal, which helps in terms of boosting rural income. Now, when you look at the income buckets within rural and urban, in fact, what we've been seeing is that rural income levels have started to improve, and with inflation coming down, real rural wages have improved considerably over the last year, and that is possibly supporting demand. What has been missing has been the urban mass consumption demand, and hopefully now with rates being cut as well as the impact from the budget, which will help in terms of higher disposable income, some amount of that urban consumption should hopefully start to come back. And therefore, I believe is that the consumer discretionary pack, especially in terms of mass consumption, that is a segment that should likely benefit in this current policy environment and overall macro environment.
Okay, since we're talking about the contra and bottom-up stories in the market, let's address what's happening within the pharma pack right now. And the Indian pharma market has seen the slowest growth in the past 7 months at 7.25% for the month of May, largely driven by prices and new products. In fact, therapies like cardiac, anti-infectives, respiratory and other outperformed, while gastro, anti-diabetic and derma lagged. Shrishti is here with all the highlights.
Well, yes, once again, we have seen a sluggish growth trend when it comes to the domestic pharma companies, because for the month of May, IPM has recorded a growth of 7.2% on a YY basis when it comes to May 2025 sales data, but that's driven by the price and the new products. We'll talk about that, but the key to note is that this growth number of 7.2% is the slowest growth in the past 7 months as well, and it's been 19 consecutive months where we have seen IPM growing less than 10% as well. In the month of May, the company did experience a price hike of 5%. And the new products growth was seen at 2.2% on a YY basis, while a very sluggish and a subdued volume growth, what the company witnessed in the month gone by, which was absolutely flat rather. But let's also highlight some of the key therapies that did well. So therapies like cardiac, anti-infectives, respiratory, they were the one which actually surpassed the industry growth. And along with that, some of the therapies like gastro, anti-diabetic, derma, gynec, they were actually languishing in trade. And in that as well, we have seen companies which did surpass the growth number of the IPM, that is 7.2%, when companies like Sun Pharma, Dr. Reddy's, Torrent Pharma, even Ipca, they were actually growing well ahead of the industry growth trend at 11%. But on the flip side, companies like Zydus, Alembic and Ajanta, they were seen to be languishing behind. But amidst that, one of the other key trends that was picking up was the sales in Mounjaro, that is the GLP-1 opportunity. That has seemed to be picking up pace. It's almost a 13 crore sale, what this particular drug itself that has recorded, and it's a substantial jump from the April as well as the data that was seen just same month a year back. And along with that, it's almost a double the sales on a month-on-month basis. And lastly, Nomura has come out with a note. They're saying that the growth rate in the month was actually in line what the recent past has been suggesting and what they were anticipating as well. But they think that the growth of the branded generics is impacted by the market share gains by trade generics and the private label medicines as well. So those were the key takeaways from May IPM data.
Okay, Shrishti, thanks for taking us through that. Shabani, while that was on pharma, Shrishti was talking about how the sales of some of these pharma majors have taken a hit, but that has also been a sector that has been largely underperforming. Now, on a year-to-date basis, while the flavor of the year has been with the financials, barring that, where would you place your bets in a market like this? Any themes where you're seeing some resurgence, or would you like to stick with the ones that have already outperformed so far?
Yes, so from a theme perspective, one large theme that we already discussed was the entire consumer pack, especially the discretionary consumption and the mass consumption segment. The second, of course, is the BFSI space, given the policy initiatives and hopefully the improvement in credit growth that should ensue given the rate cut cycle. The third segment, and as you were discussing, is on the pharma space. But within pharma, of course, pharma is a fairly large segment with different parts now comprising the sector. Within pharma, we continue to be positive on the healthcare space, which is essentially hospitals. Now, in part, some of this segment has outperformed, but our belief is that as per capita GDP growth continues, the need for quality healthcare continues to rise, and therefore this is a structural story. as affordability increases, that growth continues. And some of this is already reflected in terms of numbers that you've seen in terms of occupancy levels, as well as growth in terms of profitability for the hospital segment. Now, as occupancy rises, many of the hospitals are also looking at expansion plans. Some of this expansion is brownfield in nature, which means, again, on a longer term basis, better profitability. So within the healthcare segment and pharma segment, hospitals is one area that we continue to be positive on. And we are also keeping a close watch on what's happening globally, especially in North America, where the tech segment is concerned, given the kind of volatility that we have seen in this space. And there again, we believe that there are structural opportunities. However, near term, of course, there are challenges because of slowdown in US demand, and which is impacting some of the IT players in terms of growth outlook in the near term.
Well, the big shake-off seems to be happening within the QCOM space, and Rapido, the ride-hailing player, has now started onboarding restaurants in Bangalore as part of a test pilot ahead of the late June launch, and it's coming in hot with a flat, low commission model as well, it seems. And restaurants are betting on Rapido to be a more democratic and restaurant-friendly alternative to the current giants, that's Zomato and Swiggy. Anjali Palod, my colleague, is here with more details.
Rapido is planning to begin its food delivery starting with Bangalore by the end of June, and in this process they've started onboarding the restaurants. What's interesting here is the low fixed commission model that they have introduced for restaurants, in which all the orders that are below 400 rupees will have a flat commission of 25 rupees, and for all orders above 400 rupees, Rapido will be charging restaurants a flat commission of 50 rupees. Now, this is much lower than what the restaurants have been paying to the other two competitors in the space, which is Swiggy and Zomato. And small restaurants especially have been bringing up the issue of rising commissions and rising costs of being listed on these platforms, and therefore a third player in the form of Rapido might give them a much needed breather. We are also gathering from sources that Rapido has advised or asked restaurants to list at least 4 items on their menu below 150 rupees on the platform. And also another issue that had come up between restaurants and these platforms was on consumer data. And we are getting to learn that Rapido has agreed in principle to share consumer data with the restaurants, and in their conversations, Rapido has been attracting restaurants to list on their platform by this low commission model, as well as the big fleet or rider availability that they have through the ride-hailing platform, as well as a big existing user base in its ride-hailing services, and it is expected that they will begin these services by the end of June or first week of July.
Okay, Anjali, thanks for that. So, of course, we'll be bringing you up to speed with more details when Rapido solidifies their pilot in Bangalore and hopefully in other cities. But Shivani, what are you making of this entire quick commerce, quick food delivery space? Now that quick food delivery is an up-and-coming theme and you already have major forays by the listed players, you also have on one end trouble looming when it comes to Zepto, on the other you have a big splash being made immediately by Rapido. Where do you see this space headed? Because this market is already so competitive. How worse or how much more worse can it get before it starts to get better?
Yeah, so when we look at this entire space, let's put it into two parts. One is the quick commerce segment, and then the food delivery, which is what you were discussing earlier. On the food delivery side, over the last many years, what we have seen is there was very high competitive intensity. Competitive intensity abated, and then you were left with two large players, and it became more or less a duopoly. So we'll have to see, even the food delivery basket, how a new player enters, whether the new player is able to scale up and become a pan-India player, or it remains a fringe player, basically focusing on a few specific markets, and that will possibly have a bearing overall. But as of now, when you look at the food delivery segment is a profitable segment. And given the fact that competitive intensity has actually come down over the last 3-4 year period, this segment has seen improvement in terms of overall profitability. Now comes the quick commerce space. That segment is likely to remain hyper competitive for some period of time in the near term. However, our belief is that players which have a focus in terms of moderating or looking at cash flows as well as profitability over the longer term will possibly emerge victorious in this segment. Like we saw in the case of food delivery, when there was hyper competition and then the competitive intensity started to abate given the balance sheet strength of a few players. Possibly over a medium term, something similar may unfold. However, at this point in time, within the quick commerce segment, the intensity of competition is likely to remain high, and that is something that we will have to navigate with. However, if you look at the overall addressable market within both these segments, the addressable market remains fairly large, penetration levels are low, and therefore there is runway for growth. But in the near term, as I said, for quick commerce, we will have to possibly contend with competition and therefore impact on profitability.
Yeah, absolutely. For now, of course, they've got pretty range, in fact, Zomato, for a while now, ever since those, FTSE MSCI rejigs as well took place. That said, take a look at what else is happening. And today you are seeing some of those, banks and financials which are seeing some profit taking. RBL is down about almost 4%, Indian Bank down 3.5%. You can see the move on Bajaj Finance as well, ICICI Bank, HDFC Bank. They've all been underperforming, as is the case with SBI. But Kunal, just when the PSB, gamut began moving, you're now seeing a little bit of a pause. Do you think right now you would bet more on PSU banks as opposed to the large cap private ones?
Yeah, I think the alpha would be generated on the PSU banking names because, there has been strong signs emerging that the PSU banking lot, especially the mid cap and the PSU banking lot, I think has been gaining a good amount of momentum as well as very strong set of volumes. And, so for example, names like Union Bank, Indian Bank, these stocks, they've been huge underperformers in the last 3-6 months or so. And these stocks have made not just a comeback for themselves, but they are now trading at multi-week, multi-month highs. Some of them, at, maybe 7 to 8 month swing highs. So that's a very strong signal that we are looking at a surge of momentum. Now, every now and then, they're bound to get into a phase of a pause for themselves, and that pause I think should be taken as a good buying opportunity. We also look at the entire PSU banking stocks in this manner, that on the daily charts for the Nifty PSU banking index, there has been an event of a golden crossover where the 50 DMA has crossed back about the 200-day moving average. That also generally indicates that we are looking at a multi-week, multi-month uptrend, which generally begins after such kind of a strong technical event into sectors. So bullish on PSU banks from current levels.
That's on PSU banks. But Kunal, what about the other sector that has currently broken its winning streak? That's Nifty Realty. Do you believe that this kind of fall that we're seeing when it comes to on some of these realty counters, the likes of Lodha, Prestige, Soba, do you think this is only a function of profit booking, or is the sluggishness now being indicated on the charts as well?
No, mild profit booking, I would say, because till yesterday end, many of these stocks were actually coming back into a deep overbought RSI level. So I was looking at the hourly charts, and in some of the cases there was an RSI of 85, 88, 82 approximately for many of the real estate counters. These stocks, some of them opened with a good follow-through up move today, but they could not sustain because of the way the indicators were poised. So we are now getting into that natural phase where these stocks would ebb off for maybe a few days, or a week or so for themselves. And but we generally believe that such kind of a strong news-driven, volume-backed, price breakouts are generally an indicator that we are looking at a major uptrend into this sector. So I believe that the next round of uptrend, whenever it begins for the real estate stocks, it should be far more stronger than what we've been seeing over the last 1 week, 10 days. So I believe in that sense, any opportunity of correction, say a 5% broad correction from their 2-day, 3-day swing highs, I think should be taken as very good buying opportunities. And my expectation is that stocks like DLF, Oberoi Realty, Godrej Properties, Prestige, and many of the other mid-cap names, Kolte Patil, etc., I think many of these stocks, they should provide a very healthy return, double-digit returns over the next 1 to 3 months.
Shivani, what is your own sense about the trickle-down effect from the RBI's rate cut of 50 basis points? Because that definitely gives a fillip to consumption. But do you think it'll just stick by with NBFCs as well as perhaps auto companies and realty plays benefiting? Or do you think the trickle-down could go as low as staples as well?
No, so I think, of course, the first derivative and the first level of impact comes more on the discretionary side. So when you look at the rate cut cycle that we have seen this calendar year, the 100 basis point of rate cut is a pretty substantial one. And that along with the CRR cut means that overall the system liquidity should improve, and that again trickles down into the consumer in terms of lower rates. The first point where the rate cut will be possibly, or the segment of lending where rate cut will be very visible, will be essentially the home loan segment, because a lot of these loans are floating in nature, many linked to the repo, and therefore you do see EMIs come down on home loans. So that's one area. The second, of course, is the entire discretionary consumption segments, where over a period of time you will start seeing the rate cut getting transmitted. So I think for the entire consumption pack, the monetary stimulus from a policy perspective, together with the fiscal push on the discretionary side, should start to flow through. What we have seen and what we were discussing earlier was that the urban consumption, and most of the commentary from consumer companies also seem to suggest so, that urban consumption has been lagging rural. And in fact, unlike last year, this year rural has actually picked up better than urban. Hope is now, with the rate cut cycle as well as with the tax benefits, the urban consumption starts to improve. And monsoons coming through should help in the rural segment as well. So yes, the first impact, I think the more direct impact would be on consumer discretionary, and then some trickle down on the FMCG side as well should start to flow through. More importantly, for FMCG, input cost pressures have come down, and that should also help in terms of margins. So overall, a consumption as a pack, be it in terms of discretionary, autos, some parts of quick commerce, quick service restaurants, retail, travel, transportation, tourism. These are all segments which should hopefully benefit from the measures that have been taken.
Point taken. Let's also welcome on board now Vinay Rajani of HDFC Securities, who's joining us on the show. And Vinay, good afternoon. Thanks so much for joining us. What's been your read-through of the market today, given that we're barely holding on to any tinge of green when it comes to the Nifty? You already have the broader end of the market that's already slipped into the red once and slightly recovered, but you also have Nifty, Bank and Sensex that have already slipped towards the red. Quite the flat day of trade coming in. It was flat so far, but now it seems to be slipping further in the last 30 minutes or so left of trade. Where do you believe we're pegged to close today?
Yeah, so basically today it's a consolidation. Being a Sensex expiry, usually happens. Recent past we have seen that on the expiry days of index, it usually remains, and the next day entire trend gets changed. So today's yesterday also there was a consolidation from higher level. Today also we can see that minor profit booking is going on in the sectors which were performing very well. Today IT has given good support, so sector rotation is going on, normal consolidation is going, but overall we have broken out from the 25,000 on the upside. That is a good sign, and the way sector rotation is happening, the way broader markets are holding, the positional trend will remain up. For the timing, it could be a running correction or consolidation, but overall I feel that it should be bought into 24,900, 25,000 is a very strong support for the Nifty. So positional trend remains intact. There is no change in the trend. It is just a profit booking in the sectors and stocks which have run up a lot in recent past. So nothing to worry about the broader market as well. So dip should be bought into 24,900 to 25,000 is a good buying range for the Nifty.
That's that on the index. But Shivani, great to have you on the show today and join in with your thoughts. Good speaking with you. We'll let you go. We'll take a very quick break on that note. It's still pretty quiet in the index, and the market breadth as well seems pretty split and divided, just marginally in favor of the declines, if you will. Let's see how the last half an hour pans out, and we'll track that after this very short break. Back to closing trades right here, Retina, and it's just turning out to be one of those very, very quiet consolidation kind of days. And, the band for the index at least has gotten even narrower, barring that flip down that you had earlier today. And that also may just look exaggerated, but it wasn't really as deep a gash, to be fair. From within the broader market as well, it's pretty split and divided. There too, you're not really seeing any meaningful moves. You're seeing some profit taking on some of the infra names, on some of the small banks, and even larger ones at that. And even Realty, look at Aloda, for instance, that's down about almost 3% as we speak right now. But on the flip side, that churn continues. Pharma, technology, these are the names which are actually propping up back in the market. But let's welcome on board Varun Goyal as well from Mirae Asset Investment Managers and find out what he's making of the market right now. Varun, hi, afternoon. Good to have you on the show. Varun, the market had a rather, short-lived reaction, if you will, to the RBI policy. I mean, come today and the rate sensitives are already lackluster.
Yeah, good afternoon, Aisha. Thank you so much for having me on the show. Our sense is this front loading of monetary easing by 100 basis points of rate cut will go a long way in ensuring there is a strong cyclical recovery as far as India is concerned. And if you combine it with 1 lakh crores of tax cuts that the government has given, I think we look set to see a significant rebound in economic growth. So our sense is cyclical parts of the economy, be it banking, NBFCs, real estate, capital goods. These are some of the sectors which will benefit from the significant easing that has been carried out. And hopefully, FY26 should be the year of revival of earnings growth after a very muted FY25, where benchmark earnings grew in low single digit. We believe this year the earnings will revert to the long period average. We expect somewhere between 12 to 13% earnings growth for Nifty 50 companies, and hopefully, the outlook for the economy and the market remains positive.
Okay, so that's the take on the reaction to the policy. But Varun, hi, this is Snehi also joining in. Given the kind of volatility and the sector churn we're seeing in the market right now, how is your portfolio placed? What is the positioning, and how are you approaching some of these very volatile spaces like financials that have been doing very well over the last couple of weeks but are seeing a little bit of a profit booking today?
Yeah, good afternoon, Snehi. I think if you look at for the next 6 to 12 month perspective, we expect a strong earnings growth. I think NBFCs clearly should be the biggest beneficiaries early on because we don't expect any NIM compression for them. I think first of the year, the banks should see some NIM compression, but that should start coming back as the rates get passed to the borrowing side also. So broadly, I think second half of the year should see strong earnings growth even from the banking space. So we remain quite constructive on the overall lending ecosystem. I think if you look at the overall non-lending side also, be it capital markets, exchanges, depositories, that will also benefit from a significant revival in the capital market activity. As I was mentioning, the capital goods space also looks set for a strong earnings momentum. Our sense is this cycle has much longer legs, and we should see.
I believe we have Varun on a patchy line. Do we have Varun back with us? If we do, we can. Yes, so Varun is back with us. Varun, please continue and finish that point you were trying to make.
Yeah, so I was saying cyclical parts of the economy should continue to do well. Our sense is even on the real estate side, we're still in the mid-cycle, and hopefully we should see another 2 to 3 years of strong volume growth led by a decent pricing action. So I think overall the economy should benefit as the mortgage payments, as your monthly loan payments for your car loans, auto loans, personal loans comes down. The economy should see a revival in economic activity, and most of the cyclical sectors should benefit.
Cyclicals, that's what one is betting on. But, just taking stock of the market today, just going to bring up some of the other movers. Some of the mid-cap IT names are doing quite well. So an Oracle Finance, for instance, a Persistent, they're the ones which are seeing a fair amount of traction as we speak right now. And that's where you're seeing some meaningful moves as well come in. Kunal, we were chatting about some of those mid-cap IT names, right? OFSS, and I think you pointed this out also earlier in the morning, and then Persistent. You think the strength will stay?
Yeah, it seems like, in fact, we are now looking at many of the mid-cap IT stocks actually showing signs of a price volume breakout for themselves. So it's not just, FSS, looking at the mid-cap end, FSL, First Source Solutions, then you have, Reddington, many of the other names, Persistent, Coforge, etc. They were showing signs of good strength, throughout the day. And I think that's a strong indicator that we are looking at a potential revival for the Nifty IT index, as well as more keen towards the Nifty mid-cap IT index, and also the large-cap IT stocks. So you saw, I think, Infosys coming back to that 1500, 1600 kind of a mark. You've TCS, which has been showing signs of strength for the last 3 consecutive days, and I think that's a strong signal that we are looking at a potential revival for many of these IT names. So I believe from a near-term play, we are looking at a point where the markets are getting poised for this sector, which has been a huge underperformer. I think could now try to at least cover up a major part of the underperformance.
Okay, so that's Kunal's positioning on some of those stocks. But Varun, coming to you, help us make sense of the AMFI data that we've seen today. It's only the overall AUM that's looking quite healthy because you've seen a fall coming in funds towards equity AUM, the broader end of the market. So your schemes from mid cap, small cap, flexi cap, they've all taken a knock. What is this telling you about the sentiment in the retail space of the market right now?
I think broadly, if you look at the medium to long term outlook, we believe this shift from physical savings to financial savings, that's a longer term trend. And while there may be some hiccups on a monthly basis, but broadly our sense is the trend will continue. So we remain constructive on capital marketplace like exchanges, depositories, mutual funds and brokerages, which we believe should see decent earnings growth over a medium to long term perspective.
Right, okay, that's the take coming in right now on how one can read that data. In fact, I don't know if we have our researcher joining in to try and dissect what the AMFI data has been. We'll get to that in just a bit. But the one stock which has been focused has been Jindal SAW. It's been investing about $118 million in UAE as well as Saudi Arabia for their expansion plans in pipe manufacturing. Which is the company and what exactly are their plans? Ashesha is here with more.
Jindal SAW is soaring in trade today on the back of those capex plans that the company has announced, totaling to 1,000 crores. Now, this is divided into three parts. The first and most important one is the company that they will be incorporating in Abu Dhabi, UAE. This will entail an investment of about $105 million, which translates to about 900 crore rupees. They say that this is for setting up 3 lakh tons per annum seamless steel plant in Abu Dhabi, and this will be done over a period of next 12 to 36 months. Let's also talk about the other two elements of these capex plans that the company has announced, which totals to about 100 crores. One is a joint venture with Buhur Investments, about $10 million investment, 85 odd crores, and the other is for ductile iron pipes. This is again a joint venture where the company will be having 51% equity stake, and the investment here will be about $10 million. Let's also talk about their healthy order book position. Currently, their order book stands at about 11,300 crores, which translates to 0.54 times of their total sales for FY26 as estimated by brokerage houses, and nearly 23% of their total revenue comes in from export orders. So export outlook continues to remain very important for the company, and now that the company is also expanding into overseas markets. Let's also talk about a couple of other aspects for the company. Remember, the company has been focusing on reducing their debt, and consequently interest costs has also come down. So debt has come down from about 3,820 crores at the end of third quarter to about 2,900 crores at the end of the fourth quarter, and consequently interest expense has also come down to about 140 odd crores. So company's focus on deleveraging and reducing their interest costs has clearly come down over the last few quarters. Let's also talk about their guidance that they have given for FY26. Remember, it reported EBITDA margins at 16.5% for FY25, but they've guided for margins to be in the range of 19 to 20% for FY26. So the outlook on margins continues to remain very strong. Now, there are several other triggers which the company is very positive about. One is the Jal Jeevan mission, which the company believes will aid volumes for the company. But before that, they are also looking to expand their capacity. So ductile iron pipe capacity is likely to increase to 100 KT by FY26, and seamless pipe capacity to increase to about 450 KT by the end of this fiscal. As I was mentioning, Jal Jeevan mission orders are likely to intensify for the rest of the year. Capex and global market continue to remain very supportive, because of which volumes could see an uptick in this financial year, and the management outlook also continues to remain positive. So the management has said that water, oil and gas volumes are expected to pick up from the second quarter of FY26. So for today, the company has announced capex plans worth 1,000 crores, because of which the stock is gaining in trade. But remember, management outlook and guidance for FY26 also continues to remain very positive.
Okay, Ashesha, thanks for all of those details. But Kunal, talking about Jindal SAW, it's basically a stock that's just come into limelight out of nowhere, right? Last 6 months, the stock is lower by about 25%. But thereafter the recovery we've seen on the stock last 1 month, last 5 days. In fact, the stock is up 16% in the last 5 sessions itself. Today, another 7%. How sustainable is this move that we're seeing on the charts for Jindal Saw? Because I understand that the news flow is massive today, but on the charts, after the cut we've seen in the last 6 months, where is the stock headed now?
See, there are two ways in which we analyze the stock. One is if the news flow was expected, then the volume built up would have been gradual for Jindal Saw, but that was not the case. In just the last 2 days is where you've seen a massive volume jump for the stock, and the stock has moved from 220 thereabouts to now 250-ish levels for Jindal Saw, which means that this has come as an unexpected news flow for the stock price. Now, eventually what happens is post that we expect that the stock for at least a week or 10 days remains into a bit of a mean reversion phase. But then, such kind of a strong, surprising news flow generally triggers a major round of upside into stock prices over the next, many months. So I believe that there should be a two-pronged approach for Jindal Saw from current levels. One is on a very short-term basis. You might expect that the stock may try and cool off, come back to the retracement of 50-day moving averages, say closer to 235, 240 kind of a range. But then on the upside, I think from a positional play, there are higher targets which open up for the stock prices, and then we could be looking at 275 to 300 as a potential target range for the stock in the next 3 to 6 months.
The other buzzer today, of course, has been Grasim. Morgan Stanley has upgraded the stock to now an overweight from the earlier equal weight and upgraded the target price as well all the way to 3,500 on the stock price, and that's something that the street is liking. Vinay, your thoughts on how the charts on Grasim are looking?
Yeah, so from the 200 days moving average, it has bounced back, and from the level of 2,500, it has come up to 2740 today. So nice recovery from the lower level, and the important thing is that it has bounced back from the longer term support. So now the stock is placed about 20, 50, 100 and 200 days EMA. That itself indicates that it is into a bullish trend on all time frame. So no doubt it is very strong on the chart and headed towards its all-time high. The all-time high is placed around 2877. So the quite strong setup on the charts for the large cap stock like Grasim, and the trend is clearly up. So definitely we should remain with the trend, and the way it is going after some consolidation or zigzag move, ultimately I'm expecting this stock to register a new all-time high about 2878.
Okay, so that's the take on Grasim. We have some news flow coming in from United Spirits, wherein the company is said that the reports on RCB stake sale are at best speculative right now. The company has also clarified, saying that they're not pursuing any such discussion. This is, of course, in light to the statement that has been making the rounds earlier in the day, wherein they're mulling. The statement was, the reports claim that the company is mulling some stake sale in the Indian cricket team of the IPL, that's Royal Challengers Bengaluru, in which Diageo holds the stake via United Spirits. And now you have the company statement saying that these talks are all speculative and there is no such discussion at the moment. This is the clarification coming on by them on the potential RCB stake sale. Varun, what are you making of the entire Alcobev space in India right now? I believe this is a sector that we've not spoken about in a very long time, given the outperformance we've seen by some of the defensives or some of the broader market themes right now. But Alcobev is a space that has currently largely been unaddressed ever since we've seen limitations, caps and policies coming out of Telangana. Do you believe all of that is behind the Alcobev space and now good days lie ahead?
Well, I think within the consumer space, this is clearly one area where the underlying volume growth has been a lot better. If you see, in the last year, I think for the first time in almost 17, 18 years, the consumer staple companies, as a whole, as a sector, delivered a degrowth. So clearly, things were fairly challenging from a consumption perspective. But I think alcoholic beverages space definitely stands out. Our senses, with 5-6% volume growth, with 5-6% kind of pricing action, these companies could deliver a double-digit kind of a growth for the next couple of years. Also, I think there is Andhra Pradesh market opened up last year, so the benefit of that opening up would also be available to most of these companies going forward. So we remain quite constructive in this space in the medium term.
Maruti, that's the stock that I just want to bring up for you on your screens. It's currently down about 1%, and the management is now saying that they're going to be cutting their production for EVs to now, I think, by about 2/3. Yeah, they're going to be cutting production of their first EV by 2/3 in April to September quarter. And there are more clarifications coming in. They're looking to produce about 8,221 e-Vitaras in April-September versus 26,500, which was planned earlier. But they are looking to ramp up production in later months to meet the full year target, that of 67,000 units. So that's only for their e-Vitara that they're looking at this little bit of a cut down in production. If one were to really link to it, perhaps it could be because of the rare earth magnet curbs. But then again, the management of Maruti has gone on record saying that they actually see no impact till July, at least, from REMs, and they don't expect any production impact in June, July, because their import applications are already filed and the approvals were awaited. So I wonder why this cut in production. But Varun, what is your own sense on how much of an issue could rare earth magnets turn out to be for the EV space in particular?
Well, I think that's something that the government of India and various OEMs are working on, and I'm sure some solution will be found. I think from a medium to long-term perspective, it is important that we have some kind of production set up in India. So I think that's the really the way out from a medium to long-term perspective. In the short term, I guess various countries are kind of negotiating based on their own intrinsic strengths, and gradually India will need to kind of build this strength. I think as in the short term, if you look at the overall passenger car space, there clearly seems to be some slowdown in demand. I think overall there are two trends which are playing out. One is the shift from ICE to EVs, and then within ICE, also the shift from smaller cars to SUVs. And I think those companies which are geared towards that, will benefit in the short to medium term from a demand perspective.
Yeah.
Okay, so that's the take on Maruti on the back of this entire rare earth metal issue. The flashes are on the bottom of the screen wherein they've announced a cut in their e-Vitara models from the EV space. But Kunal, what are you making of the rest of the sector when it comes to the auto pack? Today, auto is absolutely flat, but if you take a look at this sector on a year-to-date basis, it's done pretty okay for itself, up 4% here to date. Names like TVS, Eicher, Ashok Leyland have done pretty okay. Is this trend something that looks supportive on the charts going ahead as well?
Yeah, it should be more segregated towards very few stocks which could perform, going forward. 2023-24 was mostly most of the auto stocks they had participated. So whether it was M&M from 700 to 3,000 levels, Tata Motors from 150 to 100 levels to 1100 plus mark, and then same kind of a rally which was there for the other auto stocks, Bajaj Auto, Hero MotoCorp, etc. Now we are seeing a phase where out of the 10-11 prominent names on the auto pack, we're seeing just about 3 or 4 better performers. I would not say even top performers which are there. Even if you look at this on a YTD comparison or on a net basis comparison with other sectors, auto has not performed very well, and the reason for that is because many of these stocks are still into an underperforming zone. Now that generally happens when the sector is plagued with a lot of news flow surrounding itself, which makes difficult for the underperforming stocks to find any kind of a strong momentum as well as a follow-through up move. So I think we could be in that phase for the auto stocks going forward. But I would still believe that from a positional long-term play, this corrective opportunity should be taken as a good buying or accumulative phase for stocks like Bajaj Auto, Hero MotoCorp as well as Tata Motors.
Well, what's down today is also DMart. Bring up that stock price for you. And there's been a 10 lakh share block deal also which has happened today. So perhaps that's why you're seeing that weakness trickle in. But Varun, what is your own sense on the traditional physical retail formats?
The physical and the online and the quick commerce channel will continue to coexist in India. I think there is a large convenience factor which continues to be at play. So I think as far as the retail sector is concerned, we believe that while the share of e-commerce and the quick commerce may increase, but the physical channel will also continue to exist. And as long as the value proposition which is offered by the standalone retailers is strong enough, I think they will continue to thrive. So broadly, I think it's a great play on the India consumption story, and we remain constructive on this space.
While we're talking about losers in today's trade, Avenue is down 2%, but the shade of red on Maruti seems to have intensified right now. Let's just pull up the chart on the back of this news flow that we've just received, wherein they're looking to slash a part of their EV production for e-Vitara, and the stock is lower by about 1.1% right now. We have Shrishti who's joining in to make better sense of these numbers and the impact that the overall financials of the company could have on the back of this move. Shrishti.
Well, yes, Maruti Suzuki, as per agencies, we are getting to understand that the company is it's planning to cut its EV production by two-thirds. What was actually planned for the full year, and this time for e-Vitara, that is the new EV offering by Maruti Suzuki, yet to hit the roads of the Indian markets and the overseas market as well. For the full year, the company was actually planned to produce around 67,000 of units, but for now the company can actually go ahead with a production of almost 8,221 e-Vitaras between April and September, and that will be cut down by two-thirds of its initial target, which was decided at 26,512 units. These, as per agencies, is what we are getting to understand. Because do remember, e-Vitara is the new offering for Maruti Suzuki, and majority of the production was actually used and was actually rather planned to be used for the overseas market as well. So that is indeed negative, what we are getting to understand for Maruti Suzuki in the short term, because the other factor which has been highlighted in the same report, that does say that Maruti Suzuki will actually ramp up the production in the later months to meet the full year target of 67,000 units that has been decided by the company. So maybe what I am guessing is that maybe because of the rare earth magnet issue, the company must have taken such steps to slash their production target, at least in the initial months. But the good part is, which is being highlighted in the report, is that their full year target of 67,000 units of production remains intact right now. So that's the news flow we are gathering on Maruti Suzuki. As per agencies, back to you.
But Shrishti, what would you attribute this to? Because, you know, the management has pretty much gone on record stating that till June, July, they're absolutely okay on the rare earth magnets availability, and they do not expect any production disruption.
Well, yes, because Aisha, if you see, then for Maruti Suzuki, the majority of the offerings for now is ICE as well as some of their CNG models as well. It's just the hybrids, that is Grand Vitara, that actually uses these rare earth magnets. So between the pack, wherein M&M has an exposure to the EV portfolio, Tata Motors is a leader in that. Maruti Suzuki is well versed with what's really been happening within the rare earth magnet issue, because do remember, for an EV, it requires almost 3 kgs of such minerals to be used in a vehicle, vis-a-vis 100 grams of these rare earth magnets which are used in an ICE vehicle. And that too, Maruti Suzuki can actually go ahead and tweak some of its modifications, which is also a possibility not to be implemented right now, but in the times ahead, if this issue persists, the company can still look forward to this. But this EV issue and this e-Vitara issue can actually maybe, I'm just guessing, that can impact Maruti Suzuki in the times ahead, and maybe because of that the production cut has been what the company has announced. But yes, of course, we have to wait out for more details from the company. This is just as per the agencies we are getting to understand that the company has gone ahead and slashed their production target between April and September by two-thirds.
Shrishti, thanks for all of those details. So, well, that's the update coming in from agencies, where we understand that Maruti Suzuki is all set to slash its production for its e-Vitara model between April and September. But having said that, let's just once again check in on what the market is doing at this moment. And Nifty, well, for sure has slipped into the red as we speak, absolutely at the 25,100 mark. So that's where the Nifty is right now. Sensex also in the red. Nifty Bank is low by 0.4%. So that's what is lagging the market in today's trading session. Let's take a look at the broader end of the market. Barely holding on to the shade of green is Nifty Mid Cap. I also want to take a look at what Nifty Small Cap is up to, outperforming the market with a 0.1% gain, but nonetheless, it is the most move of gain that we've seen coming in the market. But having said that, Kunal, given the market setup like this, what would be your BTST trade for today and for tomorrow? What's looking good?
So I'll go with the IT stock as a buy. It's something which I discussed in the morning also. Oracle Finance still looks attractive, and I think at 9,400 plus levels would look out for now 9,700 as a target for OFSS, and stop loss could be kept at 9,300. So traders could look at a fresh buy or till the stop losses if someone is holding the positions. On the other hand, Exide Industries is something which I think is nearing a break of its 200 moving average. So this could be a breakout candidate over the near term. So would suggest a buy with 418 as a target, and stop loss could now be trailed to 395.
Okay, so that's Kunal's take coming in. OFSS and Exide looking good to Kunal. Varun, coming back to you, what would be your sense of the market action that we can see tomorrow? Because you did say that, or in fact, we also had the move that we've seen when it comes to the BSE Sensex expiry or the Nifty expiry for that matter on Thursdays. After that, the market seemed to stabilize once again. Usually that has been the trend. Can we expect something like that to happen tomorrow as well?
No, unfortunately, I'm no expert on F&O activity, so I'll not be able to comment much on that. Yeah.
Okay, well, so apologies for that question, Varun. So we'll just start wrapping up for the day now. We have almost 3.5 minutes left of trade. Just checking in what the index is up to. Flat for Nifty, but a shade of red coming in for Sensex and Nifty Bank. With that, I'm going to hand it over to my colleague Ashesha, who's here to sum up the trading day for us. Ashesha.
Well, yes, we are ending absolutely flat for the day. Nifty, in fact, has slipped into the red above that 25,100 mark, though. Just dangling between the red and the green as we speak. It has given up all of those morning gains. Nifty Bank, meanwhile, has been an underperformer in today's trading session. Nifty Bank, let's bring up that one for you. Down 226 points. 56,611 is where Nifty Bank is set to close for today's trading session. Nifty Small and Mid-cap index, let's also take a stock of how broader markets were performing in trade today. Mid-cap index just managing to hold on to some amount of gains in today's trading session. Small-cap index, meanwhile, up 0.1%. Let's put the spotlight on the top gainers from the Nifty 50 index. We had Grasim on the back of a brokerage report that came in. The stock was up 4%. The biggest gainer on the Nifty 50 index, up 3.7% as we speak. Dr. Reddy's, Tata Motors, Tech Mahindra. So these were some of the top gainers from the Nifty 50 index. On the losing side, though, we had Zomato, Eternal, on the back of intensifying competition because of Rapido's entry. This stock took a knock in today's trading session, down 0.6%. Trent was down 1.5%. Asian Paints and Bajaj Finance were also declining in trade today. Trend down 1.5%. Asian Paints and Bajaj Finance should also come up for you on the screen. Let's put the spotlight on the biggest sectoral gainer. IT stocks were gaining in trade today. Nifty IT index was a big sectoral gainer. In fact, the index is ending with gains of over 1.5%. We had Persistent Systems, Emphasis, LTI Mindtree, Coforge, some of the big gainers from the Nifty IT index. On the flip side, though, we had PSU banking stocks which were under pressure. Remember, after RBI's move on Friday, we had PSU banking index which was surging in trade. This was followed on in yesterday's trading session as well. But today we saw some kind of trend reversal. Indian Bank down 3.5%, SBI down 0.4%, and several other banking stocks were under pressure today. Let's also talk about a couple of newsmakers. We had Jindal Saw, the company announced capex and expansion plans in the Southeast Asian region. The stock was up 7%. Their capex plans are about 1,000 crores. On the back of these capex plans, the stock was up 7%. Grasim, as I mentioned, on the back of a brokerage report where Morgan Stanley upgraded the stock to overweight versus their earlier equal weight rating. They've upped their target price to 3,500. Grasim up 3.5% on the back of that. Eternal, as I mentioned, Rapido ventured into quick commerce and food delivery platforms. The likes of Zomato and Swiggy were also under pressure today. Eternal down 0.6%. Jana Small Finance Bank, although it gave up most of its morning gains, the company has applied for a license for Universal Bank versus the Small Finance Bank license that they have currently. It gave up all of those morning gains, but despite that, ending the day with gains of nearly 0.5%. Avenue Supermart, the stock was in focus on the back of a block deal. About 10 lakh shares changed hands via block deals that took place today. This stock was down 2.5%. We have Tata Motors. We had some commentary that came in from the management from the analyst meet where they say that the demand outlook continues to remain very muted. But all in all, turned out to be flat day for Indian markets. Nifty ending absolutely flat below that 25,100 mark. But Nifty banking stocks were clearly underperforming in trade today. But that's all the time we have on this edition of the show. Don't go anywhere. More news and updates will follow.